Forget about electric cars and e-commerce. The real battle it's about to start. It's between the world richest man is happening 500 kilometers above your head. The news is Jeff Bezos, the Blue Origin, has officially entered the ring with TeraWave, a massive 5,400 satellite constellation is designed to challenge the Elon Musk Starlink. This isn't just about the internet, it's about controlling the data grid of the future. While the Starlink has the first mover advantage, Bezos is leveraging the Amazon's massive balance sheet to catch up. TeraWave is a newly announced satellite internet network being developed by Blue Origin, Jeff Bezos' aerospace company. It is designed not for everyday home users, but primarily used for enterprise, government, and data center customers, which is requiring a massive data throughput, high reliability, ultra low latency. The scale and architecture, as per released in the internet, it seems like they have around 5,408 satellites in multi orbit constellation, 5,280 in low Earth orbit, 128 in medium Earth orbit. By having these kind of satellites, they are providing some wide area coverage and high throughput via high frequency radios. And then, like, they're equipped with optical laser link capable of terabit scale throughput. And then, like, it seems like it's not deployed. And then they are planning to deploy it on late 2027. So, TeraWave is claiming up to 6 terabyte per second of bandwidth of its internet, orders of magnitude beyond the typical satellite internet space. There is a quite comparison between the TeraWave versus Starlink. So TeraWave, they have said earlier, like they're trying to use it for enterprise data centers and government, but Starlink it's mainly used for commercial purpose. And coming to the satellite counts in the TeraWave, they have around 5,408, and Starlink they're having 10,000 plus satellites in their orbit. Okay, it's time to talk about the fundamentals. Let's start with Amazon. Amazon has a very nice market cap. They have around 2.5 trillion and the revenue is 690 billion and income is 70 to 76 billion. They have a profit margin of 11 percentage. P ratio is 30 to 36 and then PS ratio is 3.5. The cash on hand they have 94 billion and debt they are having 133 to 160 billions. Tesla has 1.4 trillion of market cap. The revenue is 95.6 billion and income is 5.1 billion and profit margin is 5 percentage. The P ratio is 278 which is quite high. PS ratio is 14.8 and then like the cash on hand is 41.6 billion and debt they have 13.8 billion. So we have talked a lot of numbers here. It's time to talk about what exactly these numbers means. The revenue growth of Amazon, it's like 10 to 13 percentage year on year. AWS cloud, it is something like it's a growth stronger than retail. It's often cited 20 percentage of their income is coming from AWS cloud. They have a very good cash flow. The operating cash flow is something like 130 billion they do have, and free cash flow they have 26 billion. In a complete high level summary, it's a large, profitable business with diversified revenues. Like they have a retail business, they have a cloud business, and they have an ads. And valuation elevated relative to the broader market, but supported by strong cash flows and the margins. Not currently paying a dividend, basically, like the common with big the tech stocks, they don't pay the dividends. When you look into the Tesla side, the revenue has hovered around 10 to 12 year on year with same the quarterly variability and occasional deadlines reported to certain periods. The vehicle deliveries and the production have been important operation metrics. The mixed trends have been seen depending on source and period. When you look into the valuation, the PE value, when you look into there, it's extremely high, which reflects investor expectations of the future growth, like automation, autonomous driving, software, and then like a lot of things that Elon Musk does, right? And then like it's very elevated, indicating expectation baked into the stock price. As a retail investor, where I should need to park my money? When you take like Amazon or Tesla, I choose Amazon. Amazon is one of the safe place where we can park it. The fundamentals looks extremely good when we compare with the Tesla. Tesla is all about like lot of speculations. For choosing Amazon, it's all about the business stability. So today, Amazon has a three different business: AWS, and they do have an advertising business, and they have a retail and logistic business. That's the reason the business has the profit stability. Even one slows down, other will cushion it. When you look into the cash flow reality, Amazon generates a massive operating cash flow consistently. It can survive the recession, absorb regulations, invest aggressively without dilutions. Tesla cash flow is more cyclical, depends heavily on EV demand, pricing power, and all those stuff. Coming to the valuation risk, Amazon valuation is anchored with earnings. Tesla valuation is anchored to the future promise. So, if the growth disappoints, Amazon stock compress moderately. If Tesla can compress brutally, when you look into the management risk, Amazon is they don't have a Jeff Bezos dependency anymore. Professionalized leadership, predictable executions, less headline risk, and all those stuff. And Tesla is something like it's still extremely Elon centric, that great for innovation, but risk for capital preservation. I'm not saying Tesla is a very bad company or something like that. It's not the right place to do a trading or investment. Tesla is it's a high beta bet company from my understanding. The auto margin is under pressure, EV market becoming competitive, and the full self-driving robotics it's still unproven monetization. The stock price assumes a big future breakthroughs. You are paying today for results that may come years later. About the Amazon technicals, is it a right time to enter or how is it? Okay, so this stock looks like it's completely in a bull run. I don't see this is undervalued or something like that, but I say like this is something like fairly overvalued. It's not completely overvalued, so we are in the in between like overvalued and then undervalued. To being as a long-term investor, we may need to wait actually for this particular stock to invest heavily. Currently at the moment, to catch up the momentum and all those stuff, I can start investing slowly whenever this it seems like it's a trend line. Like here, if you see here we have it's been down here and then it's up and then it's down and then it's up, same like it's down and then it's up here. So whenever it goes down, like we can accumulate some amount of stock, and then like if it goes up and then like we can hold, and once again if it comes down we can accumulate some amount of stock. Basically like here I'm accumulating 10 stock, means like here I will accumulate only 8, and here I will accumulate 6, and here I will accumulate something around 4 or 2 or something like that. So slowly like we can accumulate it. As of now, currently I'm not going to invest heavily on Amazon because it seems like it's already having a bull run. Better it's wait, the time will come so that we can invest heavily. That's all I have for today. I hope you might have enjoyed this particular video. We'll see you on another good video. Till then, bye.